Hi everybody. So today during this presentation, I will discuss about the increasing housing prices in Australia and also the relative cost of living prices, which would impact the increasing housing prices. I would also discuss the trends that has been happening in the past years and decades, which has contributed to higher increasing house prices. And I would also integrate my knowledge of this BUSA2020 course, which what I have learned over the semester to make sure that I provide some solutions for this housing crisis problem. So this is the graph of CPI versus WPI. CPI stands for Consumer Price Index, which is the best indicator for inflation, which has been one of my learnings in BUSET 2020. And WPI is the Wage Price Index. This is the comparison of the Wage Price Index against the Consumer Price Index over the last 20 years from each quarter of March 2002 to March 2022. We can see in most of the years the CPI has usually been less than the WPI, but usually after big events like GFC and COVID, we can see that there has been substantial fluctuations. Especially in 2022 quarter, we can see that there has been a difference of more than 2.5% between the CPI and WPI, which generally indicates the higher affordability crisis and higher housing prices. Also, because housing affordability would more be more problem when the CPI increases, as the national average salary and the median salary are not increasing that much. Also, there would be higher interest rates, which would clearly have more problem for housing affordability, especially in capital areas. Also, we can see that this is a model for a comparative bar graph of a high data ink ratio, which has been used as a medians of CPI and WPI. As learned through the course, median is the best measure of centricity, and also high data ink ratios have been given in graphs where precision is one of the most key factors. Um, so also this graph indicates that from 22 onwards, and this trend continues in 23 and 24, there has been more of housing affordability problems. Now we can also see CPI indexation by groups. We have the long-term CPI indexation by rent, electricity, gas, motor vehicles, coffee, and tobacco. And we have the factors that are more in common with housing prices are rent and electricity, which has been going up around 6% each year from March 2000 to March 2020. Also, we can see that in the pandemic years, there was a lot of deflation, and the prices were quite low in terms of the electricity, especially. And we can also see that this table has been made for a low data integration model to make sure that all the variables are clearly represented, which is one of my learnings from BUSI 2020. Also, now we see a graph on the first home buyers percentage between 1993 and 2018. So this graph is usually being kept in mind before COVID to make sure that the data is more reliable. So we can see that most of the states in Australia have considered a reduction in the first home buyer proportion rates out of the total home buyers. Especially, we can see a small increase in Western Australia in the last 25 years, which is not that much, but usually in national level there has been around 4.6% decrease in the first home buyer rates. Again, this is a comparative scatter plot, and there has been a line graph which has data labels on it, which just shows the high data ratio model being applied to deliver and to visualize this data. Again, one of the key data taken from ABS showing the number of investments in the housing markets across Australia since the 1990s. So we have the 25-year period between 1993 and 2018. Again, this has been before COVID to make sure that the data is more reliable. And we can see is almost a double increase from 1993 to 2018, and it clearly shows that there is a positive linear relationship between the investments that have been made in the property market and the increasing housing prices, which is another one of the key concepts learned in BUSA 2020. Um, and now we look at the median unimproved land value. So to analyze the situation, we both go into the positives and negatives of housing prices. So one of the positive of housing prices is that for an investor, it really helps in making profit if he has invested in a property at the right time. So here in this graph, I have compared the median unimproved land values. Land values are basically the value of the land without any modifications, not considering the house. So we can also see that in the Greater Sydney area, the Hawkesbury and the Blacktown LGA, there has been between 20 to 25% increase. Especially in the Greater Sydney area, there has been more than 40% increase in the unimproved land value, which just shows that there is a profitability factor, which would be helpful for investors. Also, this shows that this is a comparative line graph with the median's unimproved value. Again, making sure that the median is the best measure of centricity, and making comparative line graphs to represent the data in a high data incubation model, one of the learnings from BUSA 2020. Also, now we look at the NHFIS, which stands for the National Housing Finance and Investment Corporation. So this is one of the data that they have given out for the number of home loans that have been provided in the last 5 years from 2018 to 2023. We can see a significant increase in the home loan facilitation rates, especially in around 2019, 20, and 21 years, which is around the time when COVID occurred. So that also means that there has been a significant increase in accessibility of home loan rates. Again, I have used the cumulative function here to make sure that all of the 5 years of home loan rates are added. Again, this model has been a high data integration model to have more precision. And we can see that a higher home loan facilitation rates would mean more people would be getting loans. However, they would still pay higher interest rates. However, this is one of the negatives of the current increase in interest rates. But we can see that the ease of getting home loans and allows people to enter the property market in a much more easier basis. So now this is a graph around the contribution to household income, which is about 20% deposit. And now 20% deposit would not be for the first home buyers, as some of the government schemes only allows for a 5% deposit. So 20% deposits are generally for the investors. And now we can see that from 2001 to 2018, the contribution that household income has to make to get a 20% deposit has been much higher. So we can see there has been around 60% to 65% increase in Sydney and Melbourne, and around 47% increase in the national household income contribution. So even if we make the national median average salary, we still have to go over 1.6 to 1.5 times over that national average salary and save that in order to get that 20% deposit. Also, this graph has been made sure to contribute to the effectiveness of the changes and the percentage changes, which has been one of my key learnings in BUSA 2020. Also, now this graph shows the time taken to save a 20% deposit from 2018 to 2023. This is all also of the home prices and the unit prices. So we can see due to COVID, some certain of the unit prices, we can see there is a faster time to save the 20% deposit. But usually around the national average is around 12 months to save that. We can also see that there has been a comparative bar graph that I have made to make sure that all the variables are assessed correctly and data labels are in there. So another one of the key things learned through BUSA 2020 is to make sure make good use of comparative bar graphs when displaying data to assess the effectiveness of the data. So we can also see here is that The time taken to save a 20% deposit is around 12 months more than the national median salary. So you would have to wait at least around 2 years on a national median salary to save that 20% deposit between the 5 year between the 5 year period that we're talking about. So now there is the dwelling to income ratio, which usually suggests that what is the price of the house compared to the income. And we can see there is usually around 1.1 to 1.2 times the national median annual income. And especially in the areas where investments are more, such as Sydney and Melbourne, there's a lot of investment in the property market. The housing affordability is more of a question there, again suggesting a positive linear relationship between more investment and higher prices. We can see that there has a significant increase on quarterly basis between the dwelling to income ratio, which clearly suggests that there is a significant issue in housing affordability. Again, this graph is a comparative line graph, and all the percentages and the changes in effectiveness of these percentages have been marked in a high data ingression model to represent more precisely. Now we also do some predicted median house and unit values by 2043, and these are based on the extrapolated median and unit values. And by extrapolated statistics, we usually mean that these have been predicted by the market condition in the current year, 2024. And we can see in Sydney the 6.3 million extrapolated median house value, and in the unit it's around 3.4, with the national average of around 2.9 million for houses and 2.1 million for units. So that clearly shows that the house values and even the unit values are going to increase around 2 to 3 times more than what the national average salary would, which is a clear concern for the housing affordability and housing increase price question. Now, one of the disadvantages of increasing housing prices is homelessness. And this comparative graph that you see is based on the ABS dataset that has been used. So we can see between the years of 2016 and 2021, there has been increase in thousands of people who have been supported, who are living in supported accommodations, who are living in temporary lodgings, and who are living in tents and other things. So that clearly shows that there is massive increase in the house prices and even in the rent and cost of living prices that suggests this relationship between homelessness and housing affordability and housing prices to be perfectly linear. Uh, Now, some of these guarantee schemes, such as home buyer guarantee scheme, regional home buyer guarantee scheme, first home buyer guarantee scheme, and these are the comparative bar graphs that represent the effectiveness of these schemes. So as learned in BUSA 2020, it is important for the graphs to show the effectiveness of the particular policy. And we can see some of these policies, especially the regional first home buyer scheme, has been more effective, at least in Western Australia and New South Wales, around 20 to 25%. And majorly it has been the home buyer guarantee schemes, around 10 to 12% more effective, which are positive signs for the housing affordability question, as more people can enter the property market in a much more simpler way. Now there is a survey, and as my knowledge of pie charts and probabilities, I have used that to my perfect exception to make the bar chart on a survey-based question that asks that what is the probability of young people buying houses if they have not already bought so. And most of the people agree that they will not be able to buy a house. At least around 35 to 37% people agree that they will not be able to buy a house if they have not bought in recent years. Again, this has been used by my knowledge of pie charts and probability, conditional probability, to make sure that I have the correct graph and the correct representation to show and analyze this problem, that around 35 to 37% of people say currently that they will not be able to get a home in their lives. Uh, and also, recent data from sources like ABS and National Housing Investment Corporation shows that you need an annual income of 170K to buy a house in capital cities, which is 1.5 times more than national average. Now I did some simulations regarding the safe margin, which is that safe margin is that on a monthly income, only 30% of that monthly income should go to interest repayments. And I have calculated the median house prices, the annual growth, the 10-year growth, the standard deviation, which is the best measure of variation learned through BUSA 2020. And I have done what if sensitivity analysis by calculating the 20% deposit, the home loan, and have done some Monte Carlo simulations. To be precise, and are around 105 simulations to make sure that I represent this data more clearly. And we can see that the probability of getting a safe margin by using both what if sensitivity analysis and Monte Carlo simulations is only around 50%, but it is only in areas like Perth, Hobart, Darwin, and in these areas that we can get a safe margin. In capital cities like Sydney, Melbourne, we will not able to get a safe margin. And also I've used interest rates, which are currently 6 to 7%, and also the cash rate, which is 4.35% in my calculations of Monte Carlo simulations and what if sensitivity analysis to calculate the probability, which is very low in capital cities, but in cities like Perth, Brisbane, Hobart, Darwin, we can get a safe margin. Now there is a graph of average home loan borrowings, which clearly shows that the housing prices would increase and continue to increase by this bar graph. The most change is in New South Wales because most investment is also in New South Wales, which should continue to happen. Now there are some solutions which I predicted on based on surveys. So most of these solutions require the candidates to predict whether they agree or not agree with a particular claim. And the best solution for this was to put a cap on the number of investment properties that a particular individual can buy under a certain time period. And I do agree with this solution because I think that in the current state of economy, it is needed for everybody to in the current next 3 4 years to have a number of cap on investment properties that will make the housing prices go a bit lower. Also, this graph is a comparative bar graph used by predicting probabilities um, and using highlight Irving ratio model, which again learned through BUSA 2020 in order to solve this housing prices problem. And here are some of my references which I used to complete this data set and presentation. Some of the references are ABS and Housing Data, Housing Australia, and Parliamentary Australia website. I hope that you have found this presentation useful, and thank you for listening.